space. I thought that I would have a conversation about what's been going on. There's a 12% drop in the price of Bitcoin this week, which is the first drop in a while. Now, mind you, the 12% drop is not something to be afraid of, in my view, because remember that the 12% drop is on the back of a overall was a 35% increase for this past month, and it's gone up 284% over the last year. So Bitcoin, something that you could have bought for as little as maybe about $4,000 or $5,000, actually $3,039 in March of 2020. You could have bought it for $3,000. Now it costs about $32,000 or something like that, $32,243. I think you're doing okay. So anyway, if you are a crypto investor or are interested in crypto investing, put a yes in the chat if you've been investing in Bitcoin or crypto or anything else. And also, if you want to see the crypto that's actually in my portfolio, you can go to drboycecrypto.com. I took a screenshot of some of the coins that I own if you're looking for any feedback in terms of what I'm buying. Now, I've got a guest that's going to come in a little bit, and I think he's working on his camera. So while that happens, what I want to do is kind of talk to you guys about what I've been seeing with crypto and why the crypto market's been acting a little bit weird. Basically, Janet Yellen, the Treasury Secretary, has said some things that I find to be a little bit disturbing about, in terms of the short-term possibilities of crypto. Janet Yellen, the incoming Treasury Secretary under the Biden administration, has basically said that she wants to propose a new set of rules regarding crypto and some of the crypto networks. She says she wants to examine ways in which we can curtail their use, meaning cryptocurrency, and make sure that money laundering doesn't occur through those channels. So that means that she wants to basically kind of toggle with one of the great advantages of a lot of cryptocurrency, which is the anonymity, the ability to do transfers without going through the financial system. I think she's saying, look, we want to jump in. We want to invoke the financial system to stop these transactions. And I think that's a real threat. Here's more. This is from Wired Magazine. It says blockchain-based financial networks are attractive to criminals because they do not require users to identify themselves as the law requires most conventional financial networks to do. Because no individual or organization controls these networks, there's no easy way for governments to force them to comply with money laundering standards. So remember, before you had the whole thing with a lot of these bank accounts in other countries, in the Bahamas or wherever, and or Swiss bank accounts, for example. A lot of people had Swiss bank accounts because in Switzerland they wouldn't comply with the banks and tell them, whose money is where and all this other stuff. Well, eventually that all got shut down. Eventually, they forced them to comply, and then a lot of millionaires got in trouble for tax evasion. And so, what it also says here is that instead of trying to force the networks to comply, regulators in the U.S. and many jurisdictions have focused on regulating Bitcoin exchanges that help users trade between dollars and cryptocurrencies. So that's like Coinbase, where you can actually trade fiat currency for your Bitcoin. Once a Bitcoin exchange identifies who initially received a particular Bitcoin payment, law enforcement can often trace subsequent payments through a blockchain network's open payment ledger. In December, Trump's outgoing team at the Financial Crimes Enforcement Network, a unit of the Treasury Department focused on money laundering, proposed a new set of rules to tighten the screws on cryptocurrency-based money laundering. Under the new rules, cryptocurrency-based exchanges would need to file transaction reports with FinCEN. I'm not sure what the acronym means. I apologize for that. Anytime a customer made a cryptocurrency transaction worth more than $10,000. This would mirror existing rules requiring conventional banks to report when customers make cash withdrawals or deposits worth more than $10,000. So let's see. So basically what you're dealing with here is you have a situation where let's see, Endoro says it's a privacy violation. I'm not going to argue with that. I am going to say that it does kind of dampen the enthusiasm that a lot of investors had when it came to crypto. I know that it annoys me a little bit, but then again, though, I'm not trying to, push dope on, push dope through the crypto network, right? I'm just trying to actually buy crypto for investment purposes mostly. Now, reading a little bit more, it says even more controversial in the cryptocurrency world, FinCEN wants to impose new record-keeping requirements for transactions involving users who manage their own private keys, dubbed unhosted wallets by FinCEN. Under FinCEN's proposal, if a cryptocurrency exchange's customer sends more than $3,000 to an unhosted wallet, the exchange would be required to keep a record of the transaction, including the identity of the customer who initiated the payment. These new rules didn't take effect before Trump left office, so the incoming Biden team would need to decide what to do with them. The Biden administration could sign off on the existing rules, rewrite them, or scrap them altogether. Yellen's comments on Tuesday suggest that she is unlikely to scrap the rules. If anything, the Treasury Department is likely to consider additional regulations of the blockchain economy over the next 4 years. Now, I've got a guess that's on his way in who's going to kind of break some of this down. It looks like he's still getting his camera ready. So just give me a thumbs up, Ian, when you're ready to come on. But basically, what I'm seeing here is that Janet Yellen does not appear to be somebody who is crypto friendly. She comes off as somebody that is going to dampen the market, somebody that isn't enthusiastic about the crypto market. And I think that, I'm guessing that the regulators see the blockchain economy and the blockchain network as a threat. That they want to control before it gets too big. I think they see this as something where a lot of money is going to be made, a lot of transactions are going to occur, and they won't get their cut. And so I believe that the government always steps in to try to get their cut. And so, so I'm not happy with any of this, but it is what it is. So you've probably seen this happen with your crypto, your crypto portfolio. I'm going to bring in my guest. And also, before I do that, could you please hit the thumbs up button, hit the share button, hit the subscribe button. We're building Black-owned media, so we need your help. So right now, if everybody could do this, please hit the thumbs up, share, subscribe button. And also, if you go to drvoicecrypto.com, you can actually see the crypto that I own in case you want to just look at my portfolio on that. Feel free to do that. So I've got my friend Ian here from Token Metrics. How you doing today, brother?
Doing great, thanks.
All right. We got a camera working, right? We ready to rock and roll?
Yes, yeah.
Okay, all right. So Ian is the are you the founder and CEO of Token Metrics? Is that accurate to say?
Yes, yeah, founder and CEO of Token Metrics.
He's the founder and CEO of Token Metrics. Ian lives deep in the crypto space. Ian became famous because Ian had a portfolio online that he shared where he took $20,000 and turned it into $5 million. Tell me if I'm lying on you, Ian. If that is that accurate?
Yes, yeah, that's the
truth. So this brother created $5 million in crypto, and he did it in front of the world. So he became super famous for good reason. He deserves it. And so I'm going to welcome Ian to the space. How you doing today, brother?
Doing well. Crypto is doing well, which is always good. Definitely here to kind of share my knowledge that I've learned and to help other people come up. Okay,
so what I'm going to do, Ian, is I'm going to shut up then and ask you, what are you seeing right now? I'm a little bit disturbed by Treasury Secretary Yellen. We can start there. That bothers me as a crypto investor. Should I be bothered about what she's been saying?
I don't think so, because if you listen to the full interview, the way they framed the question was in regards to terrorist financing. So the only way to really answer that, especially her as a regulator, was in that manner, right? So governments really do want to foster innovation and technology, because they're seeing, for example, China is launching its own cryptocurrency and all these other countries. So for the US to stay ahead of other countries or to just keep pace, they have to innovate. Even in the last year, around the last bill and the stimulus package, there was an option to possibly create a digital dollar. So the government is already heading towards there. And they actually want to create crypto for stablecoins for the government, because they can now monitor anybody online, and they see the future of money is going online. So I think they're just looking to clean up the space to make things a lot more mature, but I don't really think they're trying to hinder or halt innovation at all.
So you think that the cleaning up process is going to do more good than harm, meaning in terms of participation, demand for crypto, us feeling safe, and I see that, right? When there are when you have the financial police, so to speak, kind of around, it's like a neighborhood. If the police are around, everybody feels safe, and there's people will bring their kids, and like Times Square. There's a time where you didn't take your kids to Times Square because it was dangerous, but then they made it safe, and everyone wanted to go there for a tourist attraction. But then it almost seems like with crypto, you're losing something, because there's this conversation about how much of the market from crypto is being driven by people that don't want to be seen, that want to be, that like the anonymity, whether you're talking about people that are engaged in illegal activity or just people who want their privacy. What percentage of the market do you think is driven by people that just don't want the government in their business?
Oh, I would say probably about half, honestly, because
Hmm.
the early adopters of cryptocurrency were people who had libertarian principles in general, right? People who wanted small government, wanted to have their own money and money not controlled by anybody. So back in 2013, the early birds in crypto had that same mindset. But over time, over each bull run, new people have entered the space. So back in 2017, you had people who were not so much in crypto for the libertarian ideals, but were more of retail investors and traders. And now in 2020 and 2021, we have institutions entering crypto from JP Morgan, Samsung, Facebook, all these hedge funds entering the crypto space. They don't totally have a different idea and philosophy. So I think that as the market gets bigger and bigger and bigger, it's now becoming more of a melting pot in terms of what people believe in.
Hmm. Okay, so Ian, and what's your last name, Ian? I want to make sure everybody knows
Balina,
it. But how do I spell that?
Balina.
Balina. Okay. So everybody, I'm speaking with Ian Balina, who
Mhm.
is the CEO and founder of Token Metrics, and we're talking about what's going on in the world of crypto and what's happening with Bitcoin and everything else. Hit the thumbs up button if you haven't done it yet. So, in a way, what I'm hearing is I'm hearing two competing kinds of ideas, both of which can be good for crypto, one short term, one long term. The first thing I'm hearing, well, what I was initially hearing from Yellen was this idea that she wanted to curtail the use of crypto. When she used that word curtail, right? We want to curtail their use. Um, you're saying that she wants to curtail the use by certain people, but not stifle innovation for everybody,
No.
right? Okay.
Yeah. I mean, definitely by policing crypto a lot more, it will definitely add some additional friction. But I think it benefits crypto long term because the market
Hmm.
will get bigger.
Okay. Okay. And okay, and the reason it's going to get bigger in your view, which makes sense. I'm just trying to piece it together is because you've got these institutional investors that are stepping in that are going to just boost up the market. So whatever you lose when the criminals leave town, you're going to gain because the legit folks are coming in with billions of dollars, and that's actually going to strengthen cryptocurrency more than what you actually lose. Correct?
Yes, right. Because if you're a hedge fund manager on Wall Street and you want to allocate capital to crypto, the only cryptocurrency available really is Bitcoin. Now, next month, Ethereum will also be launching the Ethereum futures contract on, I believe, the CME. So now institutions will also be able to buy Ethereum as well. And I think over time, this will happen for lots of cryptocurrencies. So it's basically going down the market cap line from Bitcoin to Ethereum, but eventually crypto is the new stock market. And I think for it to do that, it has to become regulated like the stock market. And that takes time. And I
Hmm.
know people in crypto might not like that philosophy. It's almost kind of like they're selling out, so to speak. But I think long term is still much, much better, right? Especially going back to governments. Governments realize that it's better to have digital currencies. That's why the European Bank, that's why China and America are looking towards creating their own digital currencies. And it's also easier for them to tax people digitally, right? Because let's say every time you make money, they can track it. Or let's say they want to do a stimulus bill, they can just airdrop everybody digital money, right? So every industry has been disrupted, and now it's happening to money, right?
Hmm.
And I think once governments issue digital currencies to their people, that's the biggest marketing engine for crypto because now everybody becomes a crypto user automatically overnight.
Hmm. Interesting. Okay, so it sounds to me like you might agree that the pandemic drove a lot of this innovation as well. That now everyone's China and the U.S. in particular, but as well as other countries around the world are all saying, okay, let's go ahead and really digitize currency. What do you think about the competing um, realities between sort of asking, okay, as we go digital with Bitcoin and everything down the line, what does that do to fiat currency? I mean, do you think that there's a conflict of interest to expect the government to want extensive innovation in cryptocurrency when they're not necessarily always going to be the direct beneficiaries of it? Or do you think that the regulation might allow them to properly tax it so they're not really concerned? Or what do you think?
I think it's both, right? Governments realize there lagging behind, right? And if they don't innovate, if they don't catch up, then they'll get left behind. But I think fiat currencies, honestly, are going to become obsolete eventually.
Hmm.
I think everything's going digital. Because, for example, I've been to Stockholm, Sweden, which is really the model of a cashless society. You go there, it's very hard to spend cash. Everything is done via credit cards, and even them, they're now looking towards creating their own digital currency.
Now,
So,
where was this again?
Stockholm, Sweden.
Stockholm. Okay.
Yes, yeah. So you go over there. I think over 90% of the transactions are in cards, right? It's very hard to spend cash over there, and I think that's going to apply to lots of countries eventually. Whether it's 5 years, 20 years down the road, cash really, from a regulator standpoint, cash is very hard to regulate because people can keep money. And I mean, one funny thing in crypto is we joke that people say crypto is used for bad things, but there's been more fines for people using money with fiat, not so much with crypto or Bitcoin. I mean, like there's for example, like JP Morgan was fined for like some, I think it was like money laundering or not doing KYC a while back, and that was over $15 billion, I believe. Right, so cash is very, very, for lack of a better word, dirty. But if you can regulate that and bring that online, you can really clean things up a lot faster.
Okay. So when you bring it online and you look at the competing relationship between the dollar, digital or otherwise, and crypto, you know, Bitcoin goes up because the dollar is going down in value, which it's always been. I mean, inflation's always existed. Do you see there being kind of a conflict of interest there? Maybe a concern that the dollar could just become, meaningless and worthless because we're going to these other means of economic transition of value.
Oh, sorry. Yeah, I think that fear is definitely there. The dollar can become worthless because historically speaking, no currency lasts forever. Whether it's the dollar, I mean, in terms of being the global reserve currency. So I definitely think there is an end in sight. Whether it's the dollar crashing and getting devalued, and whether it's Bitcoin becoming the internet's reserve currency, whether it's the Chinese yuan or renminbi. So it varies, but I think yes, regulators do have that concern that the dollar can get left behind and not really be worth anything. But I think for that to happen, lots of things have to play out. So I think it's possible, but there's a it's a black swan event in my eyes. And I think regulators know that for them to maintain the dollar as a global reserve currency, they have to innovate. And that's why they're becoming friendlier towards crypto. Because in the past, crypto was basically just laughed at as this quirky thing. But as they see this getting bigger and bigger and bigger, they know this is a rocket ship that has launched and they can't stop it. The only way to get ahead of it is to accept it. So there was a quote by Reagan back in the 80s. I think it was something like, first you tax it, then you, like, to control something, you have to tax it. I forget the actual quote, but it was really just kind of more in principle of, first you have to incentivize people to do what you want, and you can do that through taxes and regulation.
Okay, so Ethereum, you seem to be a fan of Ethereum. You mentioned going to an Ethereum developers conference, and you were excited about all the different things people are doing with Ethereum. And then you mentioned the Ethereum futures are coming out very soon. Is that a bonus? I mean, Ethereum's gone up about 106% in the last 30 days. So you see a lot more upside in that currency due to all these changes?
Yeah, I think Ethereum is the next Bitcoin. Even though I'm in crypto, I don't own any Bitcoin. I'm all in on Ethereum because Ethereum is doing what Bitcoin is doing and taking this to a whole different level. Because people can view Bitcoin as digital gold, but that market is, while it's huge, Ethereum, the best way to explain it is they're building a virtual computer that lets people build these centralized applications that are not controlled by anybody. No government, no central bank, no central authority. These are applications that technically could last forever. And the way to view Ethereum is, imagine Microsoft back in the 90s. Microsoft, Bill Gates became a billionaire and the richest person in the world for a long time by building a platform, Windows, that let people build software applications.
Hmm.
So Ethereum is doing the same thing on the blockchain. So Ethereum, in a way, is the future of Microsoft in my eyes, right? But I think that market of building a platform for software applications is much, much bigger than digital gold. For example, everyone keeps talking about how institutions will come into crypto and blockchain. For example, the World Economic Forum predicts by 2027 that 10% of the world's GDP will become tokenized. That adds up to about $9 to $10 trillion. If that gets tokenized, right now the best platform for tokenization is Ethereum. Right? So I think Ethereum really has a monopoly. And right now, Ethereum is working towards launching ETH 2.0, which is basically a new version that will scale a lot better. So all this money on Wall Street and all this money coming in that wants to get tokenized will have to happen on Ethereum blockchain, because Bitcoin is not really designed to run applications. Bitcoin is designed to be a currency, even though it's now not really being used as a currency. It's now being used more as gold, more as almost kind of like a digital precious metal. But the platform of having people build any kind of application that can run forever, not controlled by anybody, I think is huge. Because let's take, for example, just the derivatives market. That's estimated that's over $500 trillion. If part of that, or even all of it, moves onto the blockchain, it has to move onto Ethereum. Ethereum is the only blockchain right now that can support that. And in the future, I think we'll support that as well, especially with ETH 2.0. ETH 2.0 is taking Ethereum at its current level and making it scale a lot faster, meaning that faster transactions, more processing power, being able to support applications that can really build the future of the internet. That's why Ethereum and blockchain in general is called Web 3.0. Web 1 was basically the 1990s. Web 2 was social media, and Web 3 are applications that can be powerful and not really controlled by anybody. The centralized applications.
Wow. Everybody, I'm speaking with Ian Balina. Ian is the founder of Token Metrics, which does a lot of things in the crypto space. And by the way, Ian, people asking for your social media. How can they get in touch with you? I'll type it in here.
Yes, at Diary of a Made Man.
Diary of a Made Man.
Yeah, I can type it here.
Okay. Well, I was actually going to put it in there for you. Is that right?
Yes.
Okay, there we go. There we go. So anybody wants to follow Ian can follow him at Diary of a Made Man. Now, where did that come from?
Oh, it came from graduating from college, from grad school. I went from basically being broke, and when I got my first job overnight, to having money. And so I was joking around. I was like, I went from barely having enough money to buy a Happy Meal at McDonald's to not having to worry about money again, right?
Wow.
And that's when I realized all the time in school, because I majored in computer engineering, right? All the hard time studying, the exams, the classes. At that point in time, I then realized that the struggle was worth it, right? So kind of like, to borrow the concept from like mafia movies, like Goodfellas and all that, I went from like somebody who was grinding and hustling to now finally making it, right? Kind of like the whole phrase of "Mama, I made it."
I like that. Yeah, I mean, it's and that's important because a lot of people don't make that sacrifice. When I was in grad school in my 20s, I was in school for a really long time, and nobody in my family did anything like that. And I remember thinking, when I was like 27, still in school, I remember thinking, okay, I'm gonna spend a few years living like nobody else will, so I can spend the rest of my life living like nobody else can. And and the rewards were even greater than I thought they'd be. And I knew they'd be good, but I didn't know they'd be this good. And so let me ask you about that experiment you did online, where people watch your portfolio and you raise your crypto value from, well, you said 20,000 to 5 million, right? Tell me about that. Like, what was that like? Did you expect that to happen, first of all? and then as it was happening, what was that experience like for you?
Yeah, I mean, I definitely wanted it to happen. I'm not sure if I expected it to happen that fast, honestly, but it was one big roller coaster ride because it was 2017, and my goal was to quit my job and become financially free by the end of the year and go out on my own as an entrepreneur and just making my own money. And I looked at everything I was doing, and crypto was the best thing for me, right? I basically 80/20'd everything I was doing, and crypto was the best way to make money passively because I could make money investing through my sleep, basically, right? But just having assets that were very undervalued that could rise and had lots of potential for explosive growth. Initially, I was kind of just more gambling, so to speak. I was just buying whatever. Then I realized I had to find a better strategy and way to invest in crypto. And me working in analytics, working at IBM Watson, I then looked at myself and I said, what is my edge? And my edge was working with data and with numbers. So I just fired up a spreadsheet on Google Sheets, gathered as much data as I could on ICOs. And I gathered all this data, and I was trying to find hidden patterns in the data in terms of the cryptocurrencies that performed well. What did they have in common? And I think after going through, I think it was over 100 ICOs, I noticed a pattern. And the biggest predictor for success was the team. The team came from a credible background, whether they worked for a Fortune 100 company like IBM, Google, Amazon, the Facebooks of the world, or they had worked on a big project in the crypto space in the past, for example, being a Bitcoin core developer. Then the next thing was also the token metrics. So looking at the actual numbers, how much they raised during the ICO, did they raise at a large valuation? Did they raise at a low valuation? And I gathered all this data, put it into a spreadsheet, added a bunch of colors, and then turned that into a way to grade and evaluate upcoming ICOs. So initially it was just kind of me working kind of like a mad scientist. And I began to just live stream my process of working on the spreadsheet and researching these companies. And after a while, I was like, you know what? Time to put my money where my mouth is. And I began investing in these ICOs using the spreadsheet. And back then, ICOs were basically viewed as scams. About 4 out of 5 ended up being scams where you either got scammed, lost your money, and it went to zero, right? And during that time, using this data-driven approach to investing, we had a success rate of 4 out of 5 ICOs, making us a 5x return or higher, basically 500% or higher. So that was pretty much unheard of at that time. So that's kind of when the ICO bubble began to kind of peak up, because now people were seeing, okay, there's a way to actually make money investing in ICOs and crypto using a data-driven approach. So at the peak, the spreadsheet was getting over 1 million views a month back in January 2018. And it got too influential to a point I had to actually take it down because it was moving the market. Too many people were using it to now just blindly invest. And that kind of scared me because I don't want that much responsibility. I wanted people to do their own research.
Yeah, well, and the thing is that, I mean, you were doing this amazing thing, and money definitely draws attention when people see something that's working. They you're going to draw a lot of eyeballs, and I'm wondering how that plays out. And if it did get to the point where, as you said, it was moving the market, I can only imagine what it was doing to the smaller coins with smaller amounts of market volume. You're going to draw attention from regulators, I would imagine, because it seems to me that there's still ambiguity from the SEC in terms of how they decide whether a cryptocurrency is a currency or security. Thank you. I was like stock, no, not stock, security. Yeah. So let's talk about that. I'd like to get your thoughts on that. This XRP thing, I was real concerned about XRP being targeted by the SEC. I know there's a new chairman now. Do you think that this XRP thing is going to keep going? Because they actually mentioned the previous SEC chairman wrote a letter to Jay Clayton, who was the outgoing SEC chair under Trump, basically saying that, if you could do this to XRP, you could do this to Ethereum too. Do you think that it can keep going in that direction, or do you think that this XRP thing is going to go away, or do you think it's going to be isolated to just XRP and a couple other coins, or do you think all the big boys should be worried as well? What are your thoughts on that?
Yeah, I mean, so the new SEC chairman, Gary Gensler, has been on record in the past saying that he also believes XRP is a security in the manner of how it operates. And I think this is, in my opinion, actually, I do agree with the SEC in terms of XRP possibly being a security. And I think this case will become a case study in terms of what other projects will have to do. Whether XRP is deemed a security or not, if it is, this will change the entire landscape. Other projects now will have to either stop operating because exchanges or people in the crypto space will view them as securities, or they'll have to modify. They'll have to adapt. And I think this clarity will take a while to come. I think it's going to take probably a couple of years because the SEC moves pretty slow. So I think this battle with Ripple will last a couple of years. Now, I think XRP is going to be hindered in terms of growing, right? So that's why I don't think XRP at the moment is really a safe investment because the company Ripple was basically running XRP, even though it's meant to be totally separate. They controlled the largest supply. They owned over 50% of the supply. And by owning over 50% of the supply, they're able to basically control the market. So in the case against XRP, they were claiming that Ripple, the company, was trying to pay for exchange listings. They had a market maker who was creating liquidity and also timing whenever they would sell because the management team, the founders, Brad Garlington and the other guy, they sold, I think, hundreds of millions of dollars of XRP. At one point, they were one of the richest people in the world. They were billionaires, right? From the coin they created where they controlled the majority of the supply. Now, even in crypto, the ethos is the coin should be owned by the community, meaning that over 50% of the supply should be owned by the community. This was actually a metric I would also look at in terms of investing in cryptocurrencies and ICOs, because projects where the community owned more than half were really community-driven projects. And that's where the concept of being decentralized comes from. It's kind of like having a company where the majority vote is by the community. There is no single investor who can unilaterally decide what to do with the company.
Interesting. So it almost sounds like, would it be accurate to say that a big chunk of the crypto community has a big problem with XRP and Ripple and kind of how they do business?
Yes. Yeah.
Okay. So what I'm guessing here is one possibility is they could, because we know they're going to come in with the regulation. So the police are going to make their presence known. So one possibility I see is that they come in and you've got this group of people that are all kind of doing similar things. But one guy is a little bit more of a criminal than the others, right? Like the others, anybody could be defined as a criminal if they choose to, but they're not going to do that. They grab the person where everyone doesn't like that guy anyway, and he's clearly breaking the law, in their interpretation, and they take that person away and they say everything's fine as long as you don't do what this guy does, and everyone says, okay, we won't do what he does because we don't like him anyway. It seems to me like something like that. So it's like sort of as you were, like you can continue to operate. Just know that you are going to be scrutinized and the regulators are going to be present, and we're not going to allow you to do what they did with XRP. That's what I'm seeing. What do you think?
Yes. Yeah. So XRP is going to be made an example. Whether that's good or bad, there'll be the example in crypto. It's kind of the same thing happened with Telegram with their case. The SEC went after them, and it really showed people what not to do in terms of raising capital privately for a token sale, right? And one of the reasons why now Telegram by legal people in the crypto space is viewed as an example is because they raised money over, I think it was almost $1 billion, maybe even over $1 billion, by issuing a token for a network that was not fully operational, meaning that their blockchain had not yet launched. So now going forward, any crypto company, any blockchain company that's trying to issue their own token, they have to wait until the network is fully operational, until the product is actually live and can be used. Otherwise, they'll be going down the same path as Telegram.
Ah, interesting. Okay. Well, I'll tell you what, for the sake of full disclosure, listening to you talk in this conversation has led me to conclude that I probably want to get rid of my XRP. I was going to hold on to it, Because I thought maybe the case was going to go away because I'm not.
Yeah.
I wasn't real. I felt like it could go either way, but I didn't think they were going to mess with XRP because they were so big and powerful and everything else. But I agree with you. I think XRP could be used as an example, in which case I'm not going to sit and put my money on the line. I'd rather put it in safer spaces. So this is good. This is good stuff. So thank you for this conversation. I've really enjoyed talking to you. And everybody, please give this brother a digital thank you, digital round of applause. This is Ian Balina with an N, right?
Yes, Ian Balina.
Ian Balina. He's the founder and CEO of Token Metrics. His social media handle is Diary of a Made Man. You can check that out. And he's a living, breathing, walking example of something that I would show our 17-year-old about how technology mixed with an understanding of business and entrepreneurship can take you to amazing places. So if you got kids at home, or if you are young enough to want to do this yourself, just make sure that you understand that. I mean, that's what's driving economics everywhere, technology, and then fusing that with investing in entrepreneurship. That's how people are winning right now. So keep that in mind. So everybody, also, again, if you want to take a look at my crypto portfolio, you can go to drboycecrypto.com and take a look. Also, Ian's platform is tokenmetrics.com, right?
Yes, tokenmetrics.com.
Tokenmetrics.com. And I'm going to invite the brother back because he's very smart. And there's some other very smart crypto folks that we're connected with. But I wanted to talk to Ian one-on-one because I think what you did was amazing. That whole $5 million experiment. I think that's really awesome, man. I'm very proud of you for that. Or I respect that. I don't want to talk about you like you're a kid or anything, but
Thank you. I appreciate that.
I'm 49, right? It happens, right? So everybody have a good day, and hit the thumbs up button on your way out. And Ian, stick around for 1 second after we're done. I'm going to just follow up with you as well. So take care, everybody.